Okay, enough of that. The other big news is that the West Ham Ryan's club has won the Europa Conference League Cup last night against Fiorentina from Italy. The club has done well, but if we look at how the supporters from both clubs behaved, that's not really good publicity for what the sport should be. Right. Let's move on to some more serious stuff. So finally, the 6 major Chinese banks has already started yesterday. Reduced their deposit rates, but it's like a small reduction between 5 and 15 BPs, depending on the short to the more medium term deposit rates. So dollar China had a little blip in sympathy to above 715 on the official announcement, but now we are like stabilizing just above the 714 level. It's still pretty big, but I'd say it's relatively stable at a higher levels for now. Also because of some more geopolitics, there's been again some joint Russia-China drills, some China ship incursion in the waters of the Senkaku Islands, for which Japan wasn't really happy. A few aircraft incursions into the Taiwan zone as well. So all of these geopolitics are keeping also the Chinese yuan under the push right now, although US Blinken is supposed to go to China later this month in an attempt to thaw the relationships, as Biden had already announced a little while ago. So that is one for the Chinese you want to keep an eye on when we will have those meetings. I'm not exactly sure what day he will be going there, but okay, something to keep an eye on. All right. And in the meantime, as well, we had the PBOC vice governor out again saying overnight that they have the ability to maintain a stable FX market, and that as well, I think, has put a little cap for now on the dollar China. But we know for as long as they don't start to really send their submarine banks out and start to sell dollar yuan or put those fixings much lower than where the market is, they still seem to be relatively okay with the levels we are trading at right now in the dollar CNH. All right then. The global bond markets have come off again yesterday. Those 2 rate hikes from RBA and Bank of Canada have surprised the bond market a little bit, and we are in yet another repricing, recalibrating of the bond books, and there's also a lot to do about what the US Treasury has to do to replenish the cash balances. And they are expected, as I've been mentioning already a good few times, to issue a lot of bills. And we have the first auction coming up a bit later today. So I think for people watching the yields, watching what some currencies, especially the yen, as we know, is very close to yield moves, are going to do, it's worth keeping an eye on. It's like 4:30 p.m. London time. We've got the first short-term 4- and 8-week bill auction this afternoon, and it may have a little effect on what is happening in the bond market as well.
Hello, I'm here. Hello.
Hey, Stell.
Sorry, I'm late.
Hello. Welcome. You're early.
I'm early. Yes, I'll be 10 minutes late. I'm only 5. Hey, what can I say?
Yeah, very good. So I'm just continuing on those bonds. We also had an article, well, a speech out yesterday by the European Union Debt Commission Chief Hahn, saying that due to the spike in inflation, we know that they have put, I think it's about an 800 or so billion euro COVID fund in place, and they expect the debt servicing needs to double next year, 2024. So that as well is keeping the European yields up. We really see a global push higher in the yield sphere and lower in the bond market in the past 24 to 36 hours. Started after the RBA, but now all of a sudden the market is a little bit worried about the bond market again, and we will have to we'll have to see what happens in the bond market sphere going forward here. It may get a little more volatile again. What else do we have? I think that is.
Did you mention the main result that we had last night, which was West Ham winning?
Oh yeah,
you did.
And this one.
Oh,
and the Messi deal.
400 million.
But he rejected it, you know.
He rejected it. I know. Amazing. How can you? He clearly has too much money, right?
It's up to Adidas and Apple to pay. You know what? Your VR headset is not going to stay at 3.5 grand. It's probably going to go up to 4.5 pretty quickly, because they will have to pay Messi.
True.
Yeah. All right. Okay. Moving on. Yeah. I mean, just back on the RBA and the Bank of Canada. The market was beforehand trying to price in pauses. That as well as played into the bond market. Now again, they are pricing in more hikes on both fronts for both central banks. So that is part of what's been happening in the bond market. But as we will see, selectively, or it hasn't really had an impact, a long-lasting at least impact on in FX markets. Since all yields are going up, the FX is pretty neutral right now when we are trading in ranges. So let's have a look on what's happened then. Talking about this Bank of Canada, we said that there was a risk that they would do something, because the data were supportive of a possible move, and then so they did. They did take away one line about possible further hikes, but then at the same time, the Bank of Canada statement said that they judged that the monetary policy is not yet restrictive enough, because the consumer is holding up, the underlying inflation is holding up stubbornly, the economy is doing better than they expected, and we mentioned that those data were holding up. So they gave in to the sirens of higher rates, and they hiked. So we can call it, I mean, there's a little bit for everybody in there, but we have to call it a steady to hawkish hike. We can't find too much dovishness in there. We have to know, though, that later today, and I don't know whether this is at 4:10 really, or is it later in the day, that the Deputy Governor Baudry will speak. They usually do when there's no press conference after a rate decision. They usually talk the day after. So keep an eye on what he's got to say. And also, as we mentioned, this could be a double whammy week for the Canadian dollar. We will have the labor report tomorrow. We're expecting a small hike here. But as we know, we always have to keep a very close eye on the balance between part-time and full-time employment to see any viability of moves there. So the Canadian dollar, in my opinion, hasn't finished moving for this week. I'm actually relatively surprised. Relatively surprised, not really surprised, but relatively surprised that the Canadian dollar actually did not spike more than it actually did, and it's relatively stable. If you look at the dollar Canada and the rest of the dollars, it did not actually fall out of bed. And we'll have a look at the charts in a bit, but the big 133 figure and a quarter zone is still holding very well in the dollar Canada.
Yeah, we covered that live on Morning Edge yesterday, and I was very surprised. I thought it would have gone straight through.
Yeah.
It's very, very, very resilient dollar CAD.
And do you have any other thoughts about now that it's sank in a little bit, this decision? Do you have any other thoughts about this decision in particular?
Well, I definitely didn't expect Canada yesterday hiking, but it's you know, my main view regarding all central banks is that we are basically at or very, very close to the end, no matter what they say. So this Canadian one, I think it's going to be a dovish hike. So basically they hike now and they're probably done. Maybe they're not going to express that yet, but when the Fed next week give us a good indication, I mean, they're going to skip next week. That's what they're telling us pretty much. If there's any indication that the Fed is going to be stopping completely, then I think we can bet that Canada is as well. Because let's remember, it's you know, inflation has dropped from 8+% to 4%. Yes, last print was actually not dropping, but the overall trend is still there. Oil is not going ballistic, so you know, they have enough reason to say, yeah, okay, we're going to be on hold and see what happens. So I think unexpected hike, but I think in the grand scheme of things, and price action is actually confirming that it's a dovish hike. So let's see what they say today. Like you said,
the market does expect one more. The market does expect that they are going to take rates to 5%, which could be the case. Then they're very close to the US rates or whatever. But as we've been saying as well a couple of times, yes, yields are higher, but if they rise across the global spectrum on FX, the impact is very much diminished. But funny enough, what happened then yesterday is that also US rates started to go higher because the market is a bit scared of having too much positions, or perhaps try to push now. It's still expected, mostly expected, that they won't change next week. It's still a 70-30 probability for a hold next week. But it's funny that even in the tens, which was, in my opinion, a relatively solid move, that we managed to put in more than 10 BPs on top of where we were. Okay, enough about that. Moving on, let's see what we had. Yeah, the oils wasn't really much. I'm too high here. Yeah, the oils, bit of a non-event really. It didn't move too much on the back of it. We'll have a little look at the oil later, because we're still in that range. Data-wise, and the yen actually hasn't moved at all. But we have to know that note that the current account is for the third month in positive again. Here, as well, the raw number, which came out a little weaker than the prior one, but it's a very volatile number. But the adjusted one as well confirmed that they are again in positive territory. That is usually not supportive for a much weaker yen, but it only has an effect when the market really starts to talk about it, and I haven't really seen any big mention. Bank of Japan, the government did upgrade their GDP a little bit, supported by the revisions coming in better than expected for Q1, but it's Q1 calendar, this one, right? So this is still part of past fiscal year in Japan. So and again, I will draw your attention to the fact that real wages coming in were much lower than what we may have expected. So it could be that next week Bank of Japan would still be on hold because they want to see what May data are going to tell them on the wage front. But if it would only be for economic reasons or GDP or growth, I'd say we may see a little bit of speculation into next week, Bank of Japan again. Quickly then, Aussie trade balance, a bit of a global thing right now. The trade balances are a bit lower, so trade in general is a bit slower right now. So that is something to perhaps keep a decent eye on. I've always said that once the pandemic would be over, trade will increase in importance again. But so far, the market isn't really trading much. I think they really more look at the balance between exports and imports. But anyway, it didn't have much of an effect overnight either. What else? Yeah, the euro. Well, I mean, still Q1 data, employment very close to where it was and very close to expectations. Everything. And I think really for the news, that's it. What is going to happen later today may be of importance for those who are trading MEX. As we know, the MEX has been extremely strong over the past weeks and months. But we have seen over the last, I think the last one, the last CPI, yeah, it's a bit in line with what is happening in the States. The last CPI numbers have been coming off. The Banxico has already told us in not so many words that they could be on a pause as well. If you're trading a CPI with a CPI at 6% and your interest rates are 11.25%, no wonder that that you're in a pause mode. But it could be important if this number shows a bigger drop than what's expected. That may put a temporary top in Mexican peso, perhaps a temporary top. It won't probably scare away investors, but it could get a little bit volatile. If in turn those numbers remain a bit more stubborn, like i.e. Sticking above 6% here, the core sticking above 7.5 or so, then there is a big level to watch on the dollar MEX, and that's 17.25. 17.25 is a pretty big zone on in dollar Mexico, and we are not far away. We are less than, we're about 0.5% away from that level. For the rest, the usual claims. We had a little bit of heating up on these numbers over the weeks prior to past, but then we came back to more lower levels. Still, it's very rangy. This one for now, as we've been saying already, we need to see numbers creeping up well above 280, 300K to for the market to start really worry about those and hold there. And then, as I already mentioned, keep an eye on what's happening on those auctions. The Fed's balance sheet is coming out tonight, and that is about it. We do have next night, though, for those who are trading CNY, we do have Chinese CPI out, so keep an eye on those. Data in China have been underperforming lately. I have no opinion about where they should come out, but looking at lower data, it would be surprised that it comes out much hotter, would it? Right, that's it. Stelios, you told me that you were going to share some charts. Why don't you do that right now?
Share my life story with you. No, I won't.
Yes. Share us your story.
I'll do that now. Okay, let me take the screen.
It's all yours, mate.
Thank you. So we're getting to a point which is now crucial. I'll start with yields as always. Crucial in yields, and I think the timing couldn't be better because we have the Fed next week, and let's face it, the Fed is the main driver of pretty much everything. And I really want to see 319 10-year US. It's confluence of resistances. My view overall is that central banks are going to be on hold. Okay, maybe there's a hike more, like we said, for Canada, the UK, definitely. The ECB, most likely as well. The Fed, I'm not sure. So I think that the main theme is central banks going on hold, and maybe not saying we're done. Maybe they say we skip or we pause and reassess. As I've said before many times, we have a Greek saying that says nothing is more permanent than the temporary. So if we do pause, it will take a huge amount of inflation or other kind of shock to make central banks start hiking again. That's my humble opinion. And as we move forward in time, high inflation months get replaced by low inflation months. So CPI year on year drops by its own mechanics, goes lower. And I think that this is something that central banks like seeing. And as soon, I think the US, the Fed, as soon as they see inflation with a 3 handle, they're going to basically say, yeah, okay, this is it, we're done, the trend is still there, we're almost at target, well done us, we've done a great job. That's what they're going to say. So with all that in mind, I think yields, a spike in yields is a sell. So a drop, a dip in bonds is a buy, in my opinion. I think 10-year US will most likely get to 390 before the Fed. I think that's what's going to happen. I'm going to get long here, and long bonds, I mean, short yields. And I think the range is going to still continue to play. And I really do think that the resolution of this pattern, of this wedge, almost like a channel, is going to be to the downside. And I think the end game for 10-year US is going to be somewhere between 240 and 280. That's my humble opinion.
Yeah, and still we can perhaps straight away reply to Ali, because he seems a little bit disappointed that we don't reply the next second on his comment. So if next week data show a high CPI and core, what will be the market reaction? Well, I mean, it's going to be simple, right? We just said that, and Stelios just said that he expects CPI to start to show lower, and the Fed would like to pause at least. So if it comes in high, then the market is probably going to indeed reprice for the next day's FOMC, and then you're going to see the move up to the 390, and perhaps trying to break it before we get the FOMC meeting. Now, it's also important that we have we see the trend in CPI continue, right, to go lower. Even if it's a smaller decline, then the market may be reacting straight away. But even if it is a decline, it's still going their way, right? So that would be my reply to what you're saying.
And I just want to say also, when I'm sharing charts, the chat disappears. Because I'm on a laptop and I don't want it to be taking up my screen, so I don't actually see the questions. And also Kay and myself and Ryan, we try to answer as many questions as we can. We're obviously available in the chat room a lot more for people who are members, and we do go on a lot more detail there. So just something to keep in mind. We do our best here as well. Okay, we're humans, we're not robots. So this is my view for yield. Sorry, were you going to say something?
Yeah, we're not robots yet.
Yet, yeah, exactly. So this is my view with yields. Now, the Dixie, the dollar, which is basically in the last few days has been one of the, if not the major driver, I think it has been the main driver of markets. It's consolidating. It's going sideways after this move from 100, from the lows at 180, 100.80 up to 104.7. We're now consolidating. Theoretically, technically, this tells you that it's going to have one more leg higher. I've been saying 105.50 for a while. I think we might have that. It will clearly depend on the Fed next week. But you can bet that the yields, 10-year US and the dollar, are going to be correlated. They have been in the past, and I think they will continue to be pretty well correlated. So I want to sell rallies in the dollar. Not here. Here we are in no man's land. So I want to sell 105.50. If we get there, I'm gonna pick a couple of dollar pairs based at the time on my general macro views and also on technical levels. That's what I always do. I have a view, and then I try to find the best instruments that can give me kind of the highest percentage setups to work. So as long as I want to sell at 105.50, or if we take out these lows here, then that means that things are bad, that the Fed is probably telling us that they're done. And then I think it's an inevitability that we're going to break the lows here. We're still in a relatively wide range here between 180 and the highs here at 105.5 or 106. It will be broken. I think probably a little spike and then we break to the downside. So this is what I'm looking to do. But at the moment we're in no man's land, so I'm not touching. Equities, another sideways day, and yesterday, yes, we were down, but we're just like almost inside candles. This I treat as consolidation. What happens after we break a very important level and we're consolidating? I was actually hoping we might retest, but if we don't even manage to do that, this is still for me bullish. I would not go short here. There's no reason. It's tempting to try and find bottoms and tops, but 9 times out of 10 it doesn't work. So, or at least for me, it doesn't work. Maybe you guys are better. But no, price wise, this is still looking strong. And if things work out as I think they will, which means maybe a slightly higher level of yields, but then we drop, then this is going to give support to equities. I'm not saying that equities are fairly priced. I think they are very rich. If you look at PE and forward PE ratios, it's rich. And also there are, for example, the Nasdaq, there are 5 stocks which are pulling the whole index. You have 80% of stocks down, and you have 5 stocks taking that and balancing it out, and then even taking it even higher. So this is. Go on, sorry.
Stelios, I've seen an article saying roughly the same on the S&P as well. It's a very small amount of small number of stocks pushing the whole boat, right? And Brand says, do I see some kind of wedge on the S&P? Yeah, there is, but it's always difficult to for me at least, if you are in those wedges and stuff, to find the top, because if you have a rising wedge, your top trend line is going to continue to go higher. So it's a difficult one to look at. I'd rather actually look at it like Stel is doing now. I think that the top end of your rectangle must be around 30 or so. Is that it?
Yeah, 25, 30, yeah.
25, 30, yeah, that's a pretty decent level, I reckon. So that for the wedgies.
Yes. So I am not saying, chase it up here. I'm not, but I definitely wouldn't want to be shorting it here. I think the squeeze is still on and the market just wants to go higher, for whatever reason, positioning, everything.
And as you say, and as we were saying as well, there is a lot of doubt as to who is owning them. Because if you read all the comments, everybody thinks it's overvalued. So that means that people are more in cash than in stocks. So sometimes at some stage, if the rates are going to top out or so, somebody will turn around, or a model of one of those big accounts will turn around and say like, hey, you guys are underweight in equities, and then all of a sudden you find yourself at the all-time highs again. I mean, that's the risk. That's the risk going forward. I'm not saying that should happen or it's logic, but that is the risk, because that is how a market functions.
Absolutely. And there's a big risk of FOMO now taking over. If we get to 4,300, which is the previous high, and also the 61.8 retracement, then we break that, then I think it's going to be FOMO everywhere. People are going to say, right, this is it. We're not going down anymore. Inflation is here. Okay, maybe it's dropping a little bit. The central banks are going to stop tightening, which means not easy money, but not tighter money. So we're going a lot higher. And I think if we break above 4,300, we have one last leg towards, I don't know, these are all-time highs, aren't they? Yeah, all-time highs, and then we correct. I don't know, but at the moment, it just doesn't look to me in any way, technically or otherwise, like it's worth being short. Just my humble opinion. I've been saying it for a few weeks now, and hopefully, people are not being burned trying to short this market.
Oh.
Yeah,
I wouldn't bet on that.
Yeah, the DAX is so close to its all-time high. Same story. It's actually going a lot more sideways than the S&P. It's not as, it hasn't broken like the S&P has in recent days, but still it's so close to its all-time highs. And would you ever want to short something that is at its all-time highs? No, I always want to buy something that is at all-time highs because there's always a reason why it's at all-time highs. I always want to wait for technical proof, let's say, or developments to show me that, yes, this thing might be turning, and it's not yet. So I will be very careful with the risk here, I think.
And also, I think if you go back to if you keep that chart in mind with the dates, and then overlay it with the DAX, if you look at it, some of those spikes in DAX have been done just before the S&P went back up, because we were talking on the rebalancing act that we had a couple of times between Europe and well, yeah, they're pretty much overlaid. The orange is your DAX?
Yes.
Yeah, okay, it's pretty much, but we had some of those spikes occurring just before the S&P took off, right?
Yes,
It's in days, but we have to so. And then the S&P catches up and DAX stabilizes. It's all like part and parcel of normal market functions by the main accounts, because they regularly rebalance books, and because you have technicals, you have fundamentals, and then you have all those investors who are managing trillions of dollars all together, and when they start rebalancing, then you see those divergences in one stock market to the other. But basically, the S&P has just been catching up on what the DAX was doing a little bit earlier. I think also one of the reasons why the DAX may be more stable than S&P right now is that the economic data in Euroland are lagging a little bit, right? Or are starting to show topping out, especially the German data. Then, as a matter of fact, so that may be why the DAX is not continuing to shoot higher right here and now. But it's just
good point. Very good point, actually. Yeah. Okay. So, right. So we're talking about risk. Let's look at cryptos as well. By the way, can you hear me well? Because I think my mic might have gone.
Yeah, we hear you well.
Oh, you okay?
We hear you. We hear you.
Good. Okay. So cryptos aligned with risk, underperforming again yesterday. I think this trend will continue, the underperformance. Obviously, a lot of headlines bouncing around about Binance and all the stuff that they're being accused by the SEC. It still looks weak. It still looks like it's an asset class I wouldn't want to be owning if I want to be long risk. It used to be that cryptos were, S&P times 3. I think now the underperformance will continue. So Bitcoin is still not broken down. No, these lows here at 25.5 or 25.4. And the top side is going to be, well, there's going to be a confluence of resistance around here. The trend line is at 27.9 now, but this is coming down. The 50 DMA is also converging. We have the 23.6 as well. We're getting towards the top side. I think we have to clear the trend line, but we're closer to the bottom. And I think unless risk rallies substantially in equities, I think this is going to break to the downside. Of course, the whole problem is because of Binance, so any kind of positive headline can, move these things like a rocket. So I'm not touching them. It's a bit of a gamble at the moment. Precious metals, also not convincing, but not bearish yet. So gold is 1935, let's say, the low. We are close, but we haven't broken yet. But looking at this price action, it doesn't look particularly strong. So this has to hold, and we have to take these highs at 1985 again. So it's a tight range, 1985, 1935. My gut feeling is that still it's a more than 50-50 chance that this breaks lower, and we head towards 1840. It will depend on the dollar and yields and the Fed. So next week, I think we're going to have our answer. Silver is, similar story, consolidating, yes, doing better today, but really in the grand scheme of things, not doing much. I would love to see it at 21, 22, 22.10 to get more than one position long. I have said it before. I haven't done it many times in my life, but I really like it on this occasion. But we're consolidating. We have to go above 24.50 to call this a breakout. 24.30, 24.50 is the area. And again, I think more than 50-50 chance that we test the lows first.
I'm starting to think because I mean we are in similar positions, although at different speeds and levels perhaps, but we are in similar positions in that silver, and I'm really starting to think it's holding very well, despite we have seen some economic data slowing down. We have seen those issues in China. We have seen crude failing to keep the rallies, the Saudi driven
yields
rallies.
rising too, yeah.
And yet silver is not trading at 22, let alone 21 or below 20. You know, and we're still around 23. I mean, if we would be in a scenario where the market thinks, all right, we are going into recessions, we are going here and there would be a lot more pressure on stuff like silver, which is an industrial metal, right? So, and the fact we are here is to me personally, and that's just a personal feeling, is looking actually positive. So if we manage to get through this year, call it with soft landings or something, this silver in the long term could be extremely explosive once the central banks are starting to cool down on the yields, and if we manage to do it without going into a deep recession. If we get a deep recession, then probably bets are off, and then we're going back to 18 or 16 even maybe. But I think it's starting to look very positive that we are holding here.
Yeah, I agree. I agree. The main risk is, like you said, we're going to a deep recession.
Yeah.
But then again, if we do, and if we see the dollar dropping fast, which is a possibility, and yields dropping, that could bring a counterbalancing effect. So, I like it in the medium term.
Likely your gold is going to spike faster perhaps than silver, being more of a safe haven trade than silver as such, right?
Yes, correct. And it's also very close to its all-time high. So when that breaks, then you get all sorts of flows coming in. And anyway, let's see. But at the moment, it's both gold and silver are in waiting mode, holding pattern, and we see. Any currencies I want to look at? Sterling is not as exciting as it was, a month ago. I really thought that break would bring a nice move, a bigger move higher. On the other hand, the dollar has done relatively well over the past few weeks, so that's keeping everything kind of all the dollar pairs subdued in terms of dollar being bid. But I still think sterling is going to be one of the best performing currencies this year, and it's been doing okay. Euro pound is a lot clearer. As long as we are below 87.2, this is bearish for me. So, and again, we had the long consolidation here, a drop, 4-day drop, pretty sharp, and now again consolidating. So I think the target at 83.5 is still on, and I think it's not unreasonable to see it there, especially with European data worsening, and Germany kind of looking like it's not the locomotive it once was. So I like this trade to the short side still, and yes, you can have daily fluctuations, but overall, I like this move. And of course, the Norway pairs, which I want to short, which I'm not touching yet. This one is interesting because we have a kind of a confluence of the 61.8 of this massive move, and also the trend line. So this could be something I might get interested in to short. If we break, we're close. We have to break, I don't know, 11.72 or something like that. There has to take these lows here, take out these lows and the trend line. Maybe there's a DMA as well, the 50 DMA. I don't know. There's a lot of confluence here. I have to see how this reacts, but I want to short this, and same with dollar Norway, but not yet because I don't have confirmation, as Steve would say. So I'm waiting.
if you look at that trend in Euro Norway, okay, we had that acceleration while I was off above 12, and now we're getting back. But if you take it back, that Euro Norway,
How far back?
the Euro Norway.
Ah, the Euro Norway. Sorry.
If you look at that trend line, it's quite amazing, right? How well that has been respected.
Yeah, so many times, very, you know,
Amazing.
45-degree angle.
Yeah, 6 months of trading, right? Even more.
Yeah,
And how well respected that is. So we can imagine a break and a hold below on a daily basis, and the next morning or so that finally we are going to get a setback in there.
yeah. We need Norges Bank to stop selling, basically. That's what we
Exactly.
need.
That's exactly what I was going to say. If Norges Bank is probably going to be the one that gives us the green light to go long Norwegian kroner. And the opposite is the SNB is probably going to give us the green light to go short Swiss at one stage.
Yeah.
Uh,
All right. That's it for me, I think.
right, mate.
Yeah, I'll pass it back to you.
Thank you.
Thank you, sir.
Yeah, I'm not going to show too many more because we already had quite a bit of Stelios. So just to let you know, to show you this thing, those short-term divergences. If you look at it today, it's ticking up a little bit. Euro is doing a bit better as well, but for as long as we're in this range, those differentials, I would doubt that euro dollar is going to go anywhere fast, even though today it's doing a little better. But again, we are very firmly in those ranges. Euro dollar, I'm not even looking at it right now. The short-term players like to trade off this 107.40 and of this 106.60 for now. And for as long as we are in this range, then you've got 80 points to play inside if you're a really short-term trader. But for me, I think, again, it's going to be 108 or 106.40, which is going to show us the next direction. And then as Stelios was talking about the Dixie, which I don't look at, around 105.5, and I was just calculating that's about 1.5% from where we were. That's probably your lows 105s again. If Dixie would really shoot up there, which in my opinion could be a good enough level to and I've been saying that already. If I see it down there, I'm probably going to grab my butcher's glove out and catch a knife there as well. In that for the more medium term. Dollar yen is respecting, and this the longer trend line is now part of a shorter term triangle as well, or the opposite. The range is narrowing. It's also logic. All bond yields are going together. That being said, dollar yen is sticking around higher levels because higher yields are weighing on the yen. But again, there next week Bank of Japan, I think sooner or later there's going to be perhaps a little bit of speculation. Perhaps it's only start of next week. We have to perhaps even wait for the US CPI, which may be a bigger driver as such than actually the FOMC. I'm starting to think, but because that's what the market is going to use as for the benchmarks for next rate moves. But in the meantime, as long as we hold just below now 139, I'd say nothing else to do than trade ranges there in the dollar yen as well. Cable idem ditto. It's still inside this small rising. It could be. Do people call this a diamond? Perhaps not. I'm not familiar too much with this, but it's still trading around this magnet 124.5. Your range is 125.10 and 123.90, and I think we can safely say, without fresh news, that we are going to stick inside this range. Quick look on the Canadian dollar because we just had the Canada. We are still holding this support zone, 133 figure a quarter. I wouldn't sell it for as long as it holds. I wouldn't buy dollar Canada either for as long as we are under 134 figure 10 or so around here, because as long as we are only like 20-25 points away from the support zone, I think the pressure could still be building up a little bit. But as we've already been saying at the start of the show, we're just a tad surprised that Canada has not enjoyed much more of the Bank of Canada rate hike. But perhaps Baudry later today can push it through. I don't know. But this is going to be your big level on the dollar Canada. Another one that has made its move, and I was talking about this 104.20, 104.50 area on the Canada yen. We have moved through it yesterday. We came to retest it during the night, and we are holding it. So this is, well, for me at least, relatively simple. For as long as it stays above this zone, it is supportive, right? In the short term. If we start to trade below 104, yeah, add maybe 104, yeah, 2050, then it will be looking like a false breakout, and then you can go back into the 102s. But for as long as it's above, it's a relatively simple picture to me. Euro Canada is not really doing much, but we continue to hang around lower levels. We need to get back above 143.35 to start just getting into neutral territory. But for as long as it stays below, the pressure is still on the downside. And then regarding the mix, because we have that CPI and the PPI out, so we're actually trying to break below the down trend channel. Top side lies around 1742, but then add a bit of leeway there, right? You have the prior lows and then a bit of a line here around 1748. If the CPI starts to come off, accelerate to the downside, then I think we are going to get back into the channel. If it's stubborn, then we have this one here. And again, this high is a bit subjective. It's the post-COVID high, but you can see from where this starts, 2013, 2020, 61.8 is a 1725. Stops here, you reach 1725.30. Bottoms here, you just go below. Yeah, okay, it's pretty sizable move because it's emerging markets, but you get bottoms here. If we get a stubborn CPI, this may really put pressure on this 17-20-25 zone here in the dollar mix. So keep a very, very close eye on what's happening in about an hour and a half's time. I think it's 1 o'clock London time, so an hour and 3/4. So that for the mix. Last one I wanted to mention is dollar rand. Dollar rand broken through 19 here. For what reason, I don't really know. I haven't seen anything really specific on the rand, but we have seen the EM currencies do relatively well also, with the equity markets going up despite higher global rates everywhere. But the EM markets, perhaps still some over positioning. I tried along yesterday along this 19 again. It worked for a little while, but then I was actually very lucky to sell it at above 1904 this morning, just stepping out of the office for a while, and then I came back in and it was trading below 19. 1880 is a big support zone, and the prior higher here at 1771.72, that's I think the level of no return. For those who want to catch a knife, perhaps around 1880, worth a try. But if it goes down below 1770, I wouldn't really want to be holding any of it. Again, I haven't seen too much news. South Africa wants to still have some talks and stuff with China and Russia. So I would say that is still a negative for the rand. Eskom is still wanting to roll out more energy blackouts. I don't really know. Perhaps something has changed here. I would need to dig in. But for the time being, be a bit cautious with the rand. And that's it from us for today. day.
Awesome.
Stelios, thanks very much for being with us again. Thanks everybody for being with us every day, and we talk to you tomorrow.
Is Ryan back tomorrow? No, Monday,
I don't
right?
think so. I think he will be still on his cloud tomorrow. So I think he's going to go back. He will be on his cloud for a while, I reckon.
Yeah, no, don't worry.
I just hope that Man City can win the Champions League on Saturday. Otherwise, we will hear him for the rest of the year.
Cool. Okay, so it's the two of us tomorrow. No problem.
Yeah. Thanks, Dale.
Thank you. Okay, thanks
tomorrow,
everybody.
Bye bye.